Hello, everybody. Welcome to this week's live stream. I think it has gone live, hasn't it? Yes, it has. Interesting week, interesting markets. I think the last couple of days, it's been a frustrating week for me. It's been a losing week for me. First losing week for a while. I'm going to go through the numbers for my trades over the last month. I'll talk through some of this stuff in a minute. I did it about 3 years ago, and I'm going to do it over the next 3 months. So we'll see how things go on a month-to-month basis. So we'll talk about that in a sec. But I've been chopped around on the S&P this week. There's the S&P. That was last Friday's sell-off. The big sell-off end of last week on Chinese tariff concerns and all of that. And I thought the market was going to bounce back. It did bounce back until yesterday. And then it's all gone a bit scrappy again. So I've had 2 losers on the S&P this week. I was along the DAX. I lost on the DAX. I did actually finally get around to buying gold. So I'm in the gold trade. But a bit of a scrappy week, but it's been a good few months anyway. But I'll talk a bit more about that. So I think it's an interesting end to the week anyway. I probably won't do anything today, but I do think there are opportunities going into next week. You know, if we look at the likes of platinum, for example, the metals are taking a bit of a hit today, but that hit a multi-year high yesterday. So I wonder if there's an opportunity there. FTSE, again, that's been knocked back a lot first thing this morning. That's bouncing back. I wonder if there's an opportunity there this week. But I think for me today is a day to just let stuff settle down and look at things again with a fresh pair of eyes on Monday. But anyway, let's get some of the formalities out of the way. Let's do a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. So if you're new to this, I normally do this every Friday at this time, 2:30 UK time. And what I do, we'll go through all the major markets, indices, gold, oil, silver, a bit of FX, a bit of commodities, and see what looks interesting. Then if there's any stuff you want looking at, if you put it into the chat, we'll take a look at the stuff you want looking at. But before we do that, let me talk you through my trading over the last month. When I first launched this channel 3 years ago, I did it because there's loads of trading rubbish on social media, and as a general rule of thumb, when it comes to trading, don't believe anything you see on social media. Because it's I think too many people make it out to be easy, and of course, there's a few of us I think on this live stream who have been here for a while, and we know it's not easy. Losing month, which statistically is a bit of an anomaly for me. So it does suggest, October probably isn't going to be a losing month. Maybe November does. Who knows? Let's see. But I basically still trade the same way that I traded 3 years ago. Perhaps a bit simpler even. And it's basically trend following. So I thought what I'll do, I'll put 5 grand in a separate account, and every month or every week, if it's interesting enough, I'll show the results on YouTube. So the risk per trade is less than £200, which for a 5 grand account is probably too big anyway. So that's 200 quid is 4% of the 5 grand balance. Risk, if I get stopped out, that's what I'd lose. I'd probably more sensible risk management, which really is as low as you can bear, but more sensible, I'd say 3% or less. I think most people trade far too big on their accounts, and the risk is you get blown up. 4% is bigger than I trade in my normal trading account, but it was easy for me to do the math, so that's what I've done. 5 grand account, 200 quid risk per trade. Some trades have less risk than that. We'll have a look at the numbers in a minute because they're a more aggressive strategy, and that's mainly on the S&P and the NASDAQ, short-term trading. But the numbers look like this. So over the last month, this is the P&L. And if you have an account with this broker, I won't say who they are because they're not paying me to advertise them. I think you'd be familiar with their P&L breakdown. That's what it looks like. So a realised P&L of £986. And I had, clearly there's a big bump here, the 8th of October week. When was that? Just halfway through last week. I think it was last Friday, that is, because last Friday I had quite a few long index trades on, and it was up a lot more last Friday morning than it ended up getting closed out for. But I was running trading stops, and of course, plenty of stock markets tanked this time last Friday last Friday afternoon. So I came out of a bunch of trades then and gave back some profit. But overall, that is God. If I could do that every month, that's nearly a 20% return every month. I would be happy as the proverbial pig. But it'd be interesting to see where it goes over the next 3 months. But as ever with trading, there is much more to it than a P&L chart. The only trade that I've got open at the moment is a long gold trade, and that's slightly up, so that could add it in. But are we looking at realised P&L? So a profit's not a profit until it's taken. So that's it. That's the doodah. So it was over 16th September, 17th of October, which is today. Realised profit and loss, 18 trades overall, which for me is quite a lot of trades. But I was doing an aggressive strategy for S&P and Nasdaq. So I was doing my normal, calm, relaxed trading on pretty much everything else, but I had a more aggressive day trading strategy on the S&P and the Nasdaq, which did okay until this week. So this week it's had 2 losers this week. So 18 trades over 4 weeks, which, like I say, for me is a bit more than usual. It would typically be about 10, perhaps 2.5 trades a week, something like that. 77.7% of trades were profitable, which again, I think that is skewing a bit high. More than a bit high. Historically, for me in trading, that number is typically 58 to 62% over the years. Let's say about 60% of trades make money, 40% get stopped for a loss. So it's been a particularly good period of trading for me in the last 4 weeks. But then the trends have been good. I've ridden some good trends. The FTSE is one that sticks in my mind. I've had profitable DAX trade, profitable Spain 35 trade. So there's been some good trades in there. But part of the reason that the return on the $5,000 account has been so good is because of the success rate of the trades. It will be interesting to see how that evens out, and I completely expect it to even out over the next couple of months. Average profit versus average loss. This is a really important number if you're trading, because you cannot rely on being right loads of times. You need a strategy that when you're right delivers more profit than when you're wrong. And my average profit to average loss, basically my average profit is 1.32 times bigger than my average loss. And that's encouraging. Again, typically it's perhaps a little bit bigger than that normally, but it does show even if I was only right half the time, I'd still have made a profit over this 4-week period, because every time I lost £1, I was making £1.32 on the successful trades. So this is like I say, this is a separate account I've set up to show on YouTube. I'll come back and do bits. Well, I think last time round I ran it for 3 months. I think after the 3 months it was up 30%, which again I thought was unrealistic. I think in that I think it was October, November, December 2022. I ran it last time round, and again there were particularly strong trending markets. But as a trend follower, that's it, isn't it? You want to try and be in these strong trending times and do less perhaps when markets aren't as trending. So it did well last time round. Let's see how it does this time around. But I thought it gives us something interesting to talk about, the reality of trading. And I'm saying now, don't go away and think, well, 20% in a month trading, this is easy. I think that's a bit of an anomaly. We'll see. The profitability, how many trades worked out, again, is higher than I was expect. But I thought, let's have a look at some real numbers and some real trading. So that's where we are, or where I am after month 1. I started it on the 16th of September. There was nothing. There were no trades. That's when I put the money in this account to start trading this stuff, and that's where we are now. Even if after 3 months I was up 20%, I think that's a pretty good return for 3 months. Because again, that's what's that? 80% a year. So for the next 2 months, up, down, or up, down, and I'm basically up £1,000 after 3 months. I think it's still a good result. It'd be a bit boring for me, but hopefully that isn't the case. But, again, we've got to have realistic expectations for trading. And hopefully, from watching this channel over the years, I may not be a lot of things, but one of the things I am is realistic, and I'm not one of these idiots who tells you trading is easy and you can make 30% a day standing on your head, because you won't. You'll be gone. So there we go. We'll come back to it and see how it all works. And of course, one of the reasons I'm doing this, I run a WhatsApp group. So all the trades I talk about, I talk about in the WhatsApp group and other markets as well. I don't just talk about what I'm trading. I talk about stuff, other stuff that's interesting that I might not trade, but I still think is interesting. So in the WhatsApp group, do a daily update, talk about markets I'm watching, trades I'm running, where my stop loss is, all that sort of stuff, Q&A. And if you want to sign up to try it, you can try it for a month, use the code YouTube. You can get access for a month. It does cost you money. It'll cost you £40 for a month. And if you hate it after a month, you can cut it. Okay, and then it's £50 a month after that. But most people stay in there for many months, and it's like these live things. It's sensible, no hype, no BS, as the Americans would say, just sensible chat about trading. And I do a webinar every month for those in the group. So that's it. That's a bit of blah on that. That's the trading on that £5,000 account over the last month. Let's see how it all goes. So let's take a look at the stuff. So where are we? S&P. So it's been not a good market for me this month, but and you can see from the daily candles, it's just been a bit chop this month, isn't it? But markets obviously don't just go up or down all the time. There will occasionally be choppy periods, and if you're looking for short-term trends like what I was, you're going to get chopped around. But overall, I'd have to be a buyer. Somebody actually in the WhatsApp group pointed something out to me this week, because I never look at a lot of technical stuff. I'm very much trend and all of that stuff. But it's quite interesting. The channel on the S&P, if you do the channel, there you go. Look at that, and it's right at the top of the channel. So and that channel is going back to the COVID lows, 2020 COVID lows. So again, if you wanted a reason for selling out the stock market based on the technicals, on the long-term technicals, the US stock market, we are at the top of the channel. Interesting to see what happens. So the assumption is with channels, markets find like a natural rhythm to swing around in, and that's been the natural rhythm for the S&P over the last 5 years now, 5.5 years probably, isn't it? Yeah, something like that. Let's see. But then it was near the top of the channel here, in May 2021. It did carry on going up for another 8 months or so. But I thought that was interesting. Not something that I look at, but worth a mention. I thought, back to the daily chart, I'd still buy the dip. So I'm going to go into next week. I'm going to do nothing today, but I'm going to go into next week looking to buy the dip on the S&P as per usual, because the trend is up and all of that. When was the last time we had an all-time high in the S&P? It was only a week yesterday. So that was when we had the last all-time high in the S&P. So for me, it's a market that is still strong. Let's see where it ends today and where we are tomorrow. I suppose an aggressive trade could be to be a buyer today. If I was looking for an excuse to do a trade today, these were last Friday lows after that big tariff sell-off. So that was the last Friday lows. Let's call it 65.50. It's probed through it today in the out of hours market. It has bounced back. If I wanted to be sat there glued to the screen later on today, perhaps looking to be a buyer with a stop the other side of 65.40 or whatever is one idea. But I'm quite happy to leave it till next week. But overall, I am still positive on these US stock markets. NASDAQ, same old. In the NASDAQ, trend has been up, but again, it's been a bit of a chopper armor day. Interestingly, for the NASDAQ, it did hold above the Friday's low. Okay, so we did have a bit of weakness this morning, between 9 and 10 UK time this morning, but the market did hold that Friday low around 24,200, something like that. So again, I'm just gonna wait and see where it finishes today. So not much interest, but overall, that trend is still up, and my bet at the moment would be that we'd see further strength. So yeah, let's see what happens. I can see someone's mentioned ABAT in the chat. We will have a look at that. It's been a really interesting week for those, isn't it? So we'll have a look at those once we've been through these markets. DAX, I was a buyer of the DAX this week, got stopped out on that, and I was buying because it hit a fresh all-time high a week yesterday, And I was buying the dip earlier this week. I think it would have been in here somewhere, Tuesday. And then it's just struggled to get anywhere. And it's because it had been sideways. So I was saying, well, is this a breakout? And so far it hasn't been. So on the DAX, again, not much interest for me at the moment on that. Let's see where it is beginning of next week. See what happens. FTSE, this was one of my big winners in those trades we looked at over the last month. I think the move I caught in the FTSE was from down here, mid-September, about 92, I thought it was like 92.60 I bought, something like that, and came out of it. Actually, it came out of it last Friday, probably 90.95, something like that. So that ended up being a big winner for me. So I was looking to buy the FTSE again this week, just gone, but it's just been sliding again. So that's one for me. That's one for next week, the FTSE. You know, to see if some of this old support around 91.80, 9100, do we see a bit of stability come back in, and the market try and build for a rally again? Let's see what happens next week. Japan, the Nikkei, I got slammed on last Friday. But again, the trend in the Nikkei is up. You know, I would be a buyer of the Nikkei. I mean, that has fared better than other global stock markets this week. So overall, still positive on that. So that's stock markets. There's a bit of a choppy end to the week, I thought, and it is. Let's see where it all calms down. It is my informed opinion on stock markets at the end of this week. So that's that. So look at gold. I mean, this rise in gold is phenomenal. I've traded this really badly because I haven't traded it, you know, and I did trade it. I got stopped out at break even. I think it was at 3,900 or something down here, or 39 somewhere. Anyway, it was a break even trade. It would have been here somewhere, 39, whatever. And then I never got back onto it. So that was really poor, you know, as a trend follower, to have not got back onto that trade. But so I bought it yesterday, or the day before yesterday, because I thought I've had enough. I've got to jump in on this, just to actually get away, just to get rid of the FOMO, the fear of missing out. So I thought, if I get stopped out, I don't care, but I want to actually put a trade on. So I put a trade on. I'm long gold. It has. I mean, did it hit all-time highs today or yesterday? Hit all-time highs yesterday. And I mean, it is a ridiculous rise, isn't it? But you can't think that way, because if you think things are ridiculous, you talk yourself out of getting in on the trend. But since September, where did it close? August. So August it was 34.50. This is where I've got to use my calculator because it's too late in the week to do the maths. So we're at 42.85 now, minus 34.50. Divided by 34.50, it's up 25% nearly since the beginning of September, which is only 6 weeks ago. You know, so gold has moved 25%. A major market has moved that much in 6 or 7 weeks. And, you know, I don't think it's sustainable, but it keeps going up. You know, look at it all this week. Actually, that is an all-time high today. We have had all-time highs since Monday. Every day this week, we've had a fresh all-time high in gold. Is it a market that's getting a bit exhausted and it's sucking in the last of the buyers before it dumps? Well, let's see. Let's see what happens. But I mean, a great run in gold. If it did start dumping, you know, where would you look, or where would I look? I mean, we've got lots of different pockets of support. You know, I mean, it's down there. What's that? 4,090. That's only Tuesday. I mean, that was one area. It paused on the way up before taking off again. So I think that's an interesting area to watch. So I think, you know, there could be opportunities next week if we see some of these markets that have been running away under pressure. Silver is, well, that's interesting. Anyway, silver, all-time highs again today in silver. Is it all-time? Yes, they are all-time highs, aren't they? So that was, what, $40 end of August, and it touched 54. So that's done 30% plus since the end of August, silver. Yeah, that's right, isn't it? Yeah. So that's done even better than gold. So crazy markets. But that trend is still up, as you can see. So again, for me, that would be another one for next week, depending on where it finishes today and what it looks like Monday. You know, I'd say there's support ahead of 50 potentially. There's that trend that's been in place on silver. Let's see. But the only thing that makes me a bit worried is that you're seeing almost daily headlines, not surprisingly given the strength in these markets, about how well silver and gold are doing. And that, that traditionally can be seen as a sign of at least a short-term top, where suddenly it's all over the mainstream press. And, these particularly gold, that is a market. It's not just what's happened since September. If we go back, when's that? 3 years ago. 3 years ago, it's been rallying or rising for the best part of 3 years now. Is this the last exhaustion bit? Because that does look really extreme, doesn't it? Before it goes boom, who knows? And again, I don't really second think this stuff when I'm trading. I just have a look at the chart, have a look at the stop, and put the trade on. But for this, when we're having a bit more of a chat about it, it's quite interesting to see how it is versus the last 14 years or so. Let's see what happens with those markets. But great trends. Bitcoin. Oh, the old crazy Bitcoin. It's at a 3-month low yesterday. I don't know if you saw the same stories I saw over the weekend. I couldn't quite believe it, to be honest. But lots of stories about people absolutely blowing up. Here we go. I just put Bitcoin leverage into Google. And I was reading all these stories. I think it was on Twitter or something. So obviously 100% reliable. On Saturday, about how everyone had been, not everyone, but how loads of people had been wiped out in that move on Friday. And I thought, well, the market only went from 122 to what? Well, it went as low as 110. Okay, it's a big move. It's a 10% move, but a 10% move and suddenly everyone's getting wiped out because of leverage. Clearly over-leveraged for those sort of levels. Who's this guy? This dude has lost 4.8 million. High leverage crypto trader. Liquidated just one day after opening new positions. Okay. Oh, 40 times leverage. Oh, that explains it then. I was thinking 10 times leverage. Oh, God, if you're on 40 times leverage on Bitcoin, yeah, good luck to you. But there were a load of people apparently who were, liquidated 40 times leverage. That's crazy, isn't it? Anyway, back to Bitcoin. The big trend is up in Bitcoin since whenever it was. On this bit, September 23, so the last couple of years. It did hit a fresh all-time high in October. There was no follow-through. It's been a bit weak. I'd be expecting the bounce, personally. So I'd be looking to buy the dip, I think, on Bitcoin. Let's see where it all stabilises next week. Oil, that was another trade. It's interesting, isn't it? It's the trades that didn't quite work out that stick in my head. I was short oil in the last month as well, so that's included in that batch of trades. I was short oil from about here, from about 62, and I had a wideish stop, and it was against me for a good few days. Fell off a cliff last Friday. I thought, oh, happy days. I was on a trailing stop, and then I got trailing stopped out on Monday for a profit. So I came out of it for a profit this Monday just gone, but it's dropped another $3 since then. So it made money, but it could have made me much more money. Anyway, that's oil, and I would absolutely still be a seller of oil based on that time horizon. But what's interesting is the lows for the year, down around about $2 lower than where we are now. So overall, it's still absolutely weak, I think, oil. Excuse me, but maybe it's getting to a point where the buyers come back in. So again, it's another interesting one for next week, oil. Arguments for going long and short. I was reading something this week that's saying, as stocks are so expensive and gold's gone crazy, is it now time to buy an oil ETF for the long term? I don't know. But we're back on oil to where we were. Well, my chart only goes back to here, but back where we were in 2015. So if you'd put 10 grand in barrels of oil 10 years ago, you're not seeing any return. You've seen plenty of volatility, but if you're still holding, it's where it was 10 years ago. Anyway, interesting week next week. These old lows for oil. Let's see what happens down here. But on the hourlies, I do wish I'd stay short all week, but there we go. I'd sell a rally on the hourlies, but let's see what happens there. Natural gas. I hate this market anyway, but I think I would have been a buyer of natural gas and I'd have lost money. So I don't trade natural gas hardly at all there was this recovery that was going on since August-ish. And that's gone. now maybe the big trend. Let's flip it to the dailies. So it's just a bit of a, for me, we've got these conflicting trends in natural gas, and that it doesn't really resolve anything for me. So it's not a market that really appeals to me, natural gas. I mean, there's an argument, the dailies we're looking at here. Let's get rid of those. It's oversold on the RSI, almost, not quite. We've got the old support, the old lows. They're the lows for the year. Yeah, the lows for the year. Down around 264. The market's traded as low as 278 today. So there's maybe an argument to start thinking about a rally in natural gas. Maybe. Let's see. I might actually trade that next week. Let's see what happens there. But there's loads going on in all sorts of different markets. I think the currencies are still a bit boring. If we have a look at the dollar index, so there's the dollar index, the dollar against a basket of, I think it's 9 different currencies. But the dollar is trading where it was in June, so 4 months ago. It's all a bit sideways. So of course that translates into pound against the dollar not being too exciting, all a bit sideways. Euro dollar, although it did make a new high for the year up here in September, that's a bit boring as well. So not a lot going on in these markets. Dollar yen is a bit, I suppose there's an argument for being a buyer in dollar yen, isn't there? That's quite interesting actually. Let's have a look at that. So dollar yen, let's take that off. So if we pick up from those April lows, I mean, that could be an interesting market for next week. Dollar yen. I'd buy the dip somewhere if it stopped dipping. If I was trading it off the dailies, I'd have a stop the other side of 145.40 and see what happens. But so that's an interesting one. What about euro yen? We looked at that a few weeks ago, didn't we? Yeah, that's interesting as well. So what is that? Is that an all-time high? It's at least a 14-year plus high in the euro against the yen. Popped out just a week yesterday. I mean, that's perhaps an interesting one for next week. What does sterling yen look like though? Oh, I was in that trade as well. I did make a profit on that. Yeah, so the yen has weakened clearly. So maybe there's some interesting markets next week. Various stuff against the yen. Swiss yen. Look at that. That's that arguably looks the stronger of the ones we looked at. Interesting. So yeah, so maybe that's the focus. Take the dollar out of the equation and have a look at the yen, Japanese yen. And what else? What else looked interesting? Orange juice. I mentioned it in the WhatsApp group, but it slipped. This big support in orange juice got broken this week, and it started slipping. I mean, what a ride that has been in orange juice. Absolutely. It's just a massive trend in orange juice from November 21 to December last year. Touched 560, and then boom. Here we are at 188, so that's lost nearly 400. So it's lost 70%, 60 to 70% the price of orange juice since December last year. Massive turnaround. Did look like maybe it was stabilising, and boom, off it's gone again. It's fallen again. Sugar, I think sugar dropped. Yeah, sugar. I mean, sugar's been dropping for a long time. Sugar dropped again this week, so with weakness in agricultural commodities. So, but loads to look at. So for me next week, as usual, the main focus will be stock market indices to see what happens after this week. What's the US doing now? It's a little bit strong, but like I say, no interest for me in that one. The FTSE is perhaps one for me next week. The FTSE index. See what happens with the likes of gold and silver as well, and oil. So plenty to look at, and some of those yen markets, FX markets, sterling yen, euro yen, and Swiss franc against the yen. So plenty to look at. If there's anything, so now we'll have a look at some of the stuff you want looking at. But as a reminder, if you'd like to try the WhatsApp group, try it. Don't let me stop you. It's a daily update and an update in the afternoon. Markets I'm watching, trades I'm running, Q&A, and use the code YouTube. And all of these trades that made up that P&L were mentioned in the WhatsApp group. Yeah, so I don't say as soon as I put the trade on, right, I've bought it with a stop here. But I do say when I do the next update, I've bought it and my stop is here. And I'm normally early. I'm normally far too early on trades. And it always take a bit of time for them to come in my favour. So it's not, I am not the sort of trader who sits there 12 hours a day clicking buy, sell like a maniac. I've got a very relaxed approach to trading. So if you'd like to try the WhatsApp group, the link is down below. And I've got a trading course as well, of course. And to find out more about who I trade with, go to bit.ly/DavidTrade. Right. Let's take a look at what you weren't looking at. Now, Abat, this American battery technology doodah, isn't it? Absolutely clobbered this week. American battery technology. What goes up can come down. I mean, we've looked at these before, haven't we? Because they were all the way up there. Wow. $73 a share in Jan 21. All the way down to $1 in April. And then absolutely went ballistic. Touched, what do they touch on? This is just Wednesday this week, $11.50. And here we are at $5.29. So they've halved in less than 2 days. So far too volatile for me. But there was some news this week, wasn't there? Because I did see the news come up. It was about a government grant, wasn't it? US Energy Department ends grant for American batteries, lithium hydroxide project, blah, blah, blah. Yeah, so that was the news of the grant being pulled, which was worth just under $60 million. And that was the news on Wednesday that had people heading for the exits. I mean, it's too volatile for me. It's a fruit machine stock, as I often say. If I had to do anything, I'd buy the dip, but it's still dipping, so I'd be patient. I would do something next week. Let's see what happens when the dust settles. But the risk is that it's over. We look at the surges, to use a power analogy, description, adjective, whatever the word is. The surges we've had in the past, it surges and then it drops and does nothing for ages. Yeah, that's been the history. Hope, and then, oh no, there's no hope. Oh, there's hope. No, there's no hope. Is this going to be the same? Who knows? Let's see. Let's come back to it next week. But I'd be in no hurry to do anything. But I have watched it with some interest this week, considering the news and the absolute crackers volatility that we've seen. Live cattle dipping today, but would you follow the stampede higher? Loving your wordplay there, Tenerife Kev. This is, live cattle. I should have just bought live cattle. You've been in the WhatsApp group for a long time, Kevin. You know I was mentioning that end of last year. I should have just bought that, leveraged myself up like a Bitcoin trader 50 times on live cattle. End of last year on the breakout, and it's up. What's it up? 50, so it's up 25% live cattle this year. No, I'd buy it, absolutely. I wouldn't buy it today, but it hit a high, hit the all-time highs yesterday, didn't it? It's got a bit clobbered overnight, hasn't it, for some reason. Don't know why. But I think it's almost a textbook trend, live cattle. And who knows anything about live cattle? Not me. Yeah, but look at that trend over the years from 2021, hugs the trend line, breaks out end of 2024, retests the breakout, and we chug into a new trend with breakouts and retests all along the way. Interesting market, very technical, trendy market. But yeah, so I'd look to buy the dip on live cattle next week and see what happens. And 231, I'd have my stop below at the very least, but interesting to see what happens there. Can we have a look at Kroger? Yeah, we can have a look at that one. Kroger. We've looked at this before, haven't we? It's a bit, I mean, it's a buy, isn't it? From a trend point of view, I'd say it's a buy. We've come back. We hit an all-time high, Kroger, in August. So what's that? 2 months ago. We've sold off. The trend line's held. Old support's held. Blah, blah, blah. Off we go again. So for me, I would be a buyer. I put my stop the other side of 62. And that is it. That's it. And I just sit with it and see where it went next. But nice trend there. Another one that broke out. When did that break out? Broke out there. Well, Jan this year. Chopped around a bit. Has moved higher. But yeah, for me as a trend follower, I'd have to go through with the trend. And DoorDash, which is the food delivery thingamajiggy, isn't it, in the States? Look at that. Interesting. Well, that is interesting, isn't it? So they obviously came to the market in 2021, no doubt buoyed up by all the COVID orders, as no one could leave their home, and they were all ordering whatever they were ordering. Then, of course, like a lot of COVID-boosted stocks, that was a big old move, wasn't it? So it went from $250 to $44, and then trending up again, has broken out. I mean, I would buy it. I think that's quite interesting, that. I would buy it. I'd probably want it, because it broke out through the COVID highs, Then it pulled back, but then it broke out again. So for me, a double breakout suggests that is a valid breakout. So I'd be a buyer. I wouldn't buy it today because it's still a bit weak today. But I'd be a buyer, and I'd be thinking about a stop the other side of 230 on DoorDash. What's the news today for DoorDash? Oh, this is AI blooming slop everywhere, isn't there? A price target of 300.71, indicating a 13.9% potential return. Blah, 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 blah. They've teamed up with Waymo for driverless deliveries. They're coming to the UK, aren't they, apparently? The old Waymo driverless taxis. There's some interesting videos of that on YouTube. I think James May from the old Top Gear gets him on. Quite fascinating. The old Jaguar I-Paces. Anyway, blah, blah, blah. And on the so yeah, I would be a buyer of the dip, Nick. And on the subject of cars, we have a look at Ferrari. Ferrari, which so long defied a lot of the other car makers' slides over recent years. So, you know, Ferrari's stock price, they're listed on the New York Stock Exchange. 3 years ago were 175, 180, something like that. And touched 520 in the summer. But I've been clobbered. I do follow it because I am a bit of a car geek. I do follow it with a bit of interest. They had like an analyst day last week, investor presentations. I think it was last week. And they revealed electric cars were going to make up a smaller percentage of their mix over the next few years. So plenty of companies have rode back on EVs, haven't they? Going from 30% to 20%, I think Ferrari said. And also, I think the bigger news was not the electric car news. It was they downgraded their forecasts, I think, was the story. I think. But they've been absolutely clobbered since then. You know, they were $500 for your Ferrari shares beginning of October at $370 yesterday or Tuesday. It's a big old fall, isn't it? Interesting that. I mean, because you look at Porsche, which has got the great code P911. Porsche shares, I can say Porsche because I'm English. British. Porsche shares have been sliding for 2 years. And Porsche got delisted from the DAX index the other week. But I wonder, is Porsche past the worst? Yeah, so I mean, the trend is still down, so blah, blah, blah. And our investors, is Ferrari's time for getting clobbered coming now? But it's an interesting one. I would still be tempted to be a buyer if it all stabilises a bit. So I'd say sort of give it a couple of weeks. And is this a market overreaction? But who knows, you know? Who knows? Let's see. If I absolutely had to do anything now, I'd be a buyer and I'd put my stop the other side of 330. That's what I do. I would try and catch the bottom in Ferrari. But interesting how they got clobbered. Ferrari's drop. And Adobe, the makers of PDFs, but I'm sure they're not that anymore, are they? They're probably, who knows what they are? I don't know. AI movie maker or something. Oh, Adobe, that's not doing very well, is it? I mean, you could make the argument for being a buyer because we're down at the old lows from April and we're actually taking out those old lows. So an aggressive trade would be to be a buyer. But I would say, I wouldn't buy it because the trend is down in Adobe. So, and the problem is, for going short, I've got nowhere sensible to put a stop loss. So I'd rather sell a rally. It's all a bit messy to me, Adobe. So interesting to see if we do get a bit of recovery off these lows. I'd be in no hurry to do anything on Adobe. So blah. I think that one. And that's it. I think we're done, aren't we? So it's a bit different today. I hope you found those stats interesting. I'm a geek, right? When it comes to cars and trading, I am a geek, and I love looking at numbers like this. I think these numbers are really important because you can get a massively inflated view of how well you're doing in trading if you just look at a raw number, raw P&L. But I think if you start digging down a bit, and I look at that number there, that screams to me that was a bit of an unrealistic trading run I had in the last 4 weeks to be right almost 80% of the time. So that I think the next 4 weeks are going to be different, but I think it's really useful to do this sort of stuff. I mean, obviously, I'm pretty good at it, but not 80% good at it. So it'd be interesting to see how that all turns out. This number is always really important, the average profit to loss. So yeah. Is your monthly profit you displayed mainly from your new daily strat? Good question, Nick. Do you know what? I need to break that out, because the daily strategy, the risk taken is less than half of the risk taken on the hourly strategy, the usual strategy, without giving too much away. So yeah, the strategy I've done for years, the new strategy is using half the risk, so it trades more. But I will do the numbers, but I strongly suspect the bulk, much more than 50% of the profits, much more, comes from the usual strategy, because there were some big winners in there. There was that FTSE trade that ended up making 2.6, 2.7 times the risk in the end. So the aggressive daily strategy has contributed, but not to distort the figures overall. So we'll see. We'll do some updates and we'll see what that all looks like over the next few weeks. Be an interesting experiment. And obviously, I do the same trades in my account, and I just thought I'd do these trades in a sort of sensible sized account. £5 doesn't seem too ridiculous an amount, just to give people a flavour of the way I trade and what are important numbers to look at and blah, blah, blah. But that's it, really. I think we're all done, aren't we? I'm done anyway. Don't know about you. Interesting week next week. Let's see where it all finishes today. Like I say, it's been a frustrating week for me for trading. I've been better off just watching celebrity traders on iPlayer all week rather than looking at markets. But I've had lots of good few weeks recently trading, and it's just the law of averages. This stuff does even itself out. So we'll see what next week looks like. Lots of stuff to look at next week. Anyway, I should be back next Friday, I think, to do it all again. I'll update the trading stats then if there's any major change over the week. Let's hope I don't lose it all. If I lose it all, I won't update it. I won't lose it all. So we'll have a look at it then. If you want to try the WhatsApp group, try it out. It's only 40 quid for a month. Drop me an email. You've got any questions, drop me an email. dj@davidjonestrading.co.uk if you have any questions. I don't have all the answers, but I have been doing this for the best part of 30 years now, so I can definitely give you an opinion. Otherwise, we're all done. Have a good weekend. See you next week. Good luck with your trading.